So I'm going to be covering dollar index. Dollar index, a pair that has been breaking hearts since 1967. I mean, if you go back, have a look at when the chart started, literally 1967. You know, the times people thought they were going to get rich, but little did they know that the market was built to actually make those who are middle class poor. It's rigged. It's rigged. You can't go to school and learn how to trade, can you? There is no degree, there's no master's, no PhD in the world that you can take right now, right? That could allow you to go and trade the markets. Why? Oh, it's there for the rich people, right? It's there for the rich people and rich people only. For those of us, who are middle class or lower class, you want to take advantage of this. We're basically piggybacking the ultra rich, those who design the system and those who have algorithms that allow them to consistently make money regardless of whether the market goes up or goes down. That's the frank and honest truth about it. But we're looking at the weekly time frame, and as you can see, it's been bearish. It's been bearish for quite some time. The imbalances that we have within this downward trajectory is not that much, to be frank with you. I mean, we have one there, which is the most major imbalance out of this whole swing to the downside. You have a second one here that has been met. I did make a review a couple months ago about how I was looking for the market to rally up into this area, potentially get up to the midpoint, and then, there is a chance for us to take those lows out, dropping down into the weekly sell side liquidity pool, right? Which did happen. We got that, and we've been consolidating ever since. Now, US 10-year yields, I want to go back to US 10-year yields, even though I've done an analysis for it and I've posted it already. Interest rates run the world, right? Everybody knows this. And if you don't know, it just means that the lower the interest rates, right? The lower the interest rates mean that the cheaper the borrowing. The higher the interest rates, the higher the borrowing, which would mean ultimately that, well, stocks and other riskier assets has a higher chance of not capitulating, but definitely dumping. Whether it's down to a next weekly or monthly PD array, whatever the case may be, until the next vote to either increase or reduce the interest rate. Interest rates move the market, right? I will be honest with you guys, I don't know too much about interest rates in the sense of me sitting down and giving you guys a, 1 hour lecture. I mean, in comparison to showing you guys technical analysis on how to read the markets, how to look out for new liquidity pools, I'm more confident. Sorry about that. I'm more confident in that sense than me actually sitting down and showing you guys how interest rates truly move the market. But what I do know, based on my experience and how I've observed these markets for many, many months, come up to many years now, actually. And when I say many months to many years, I'm just talking about doing the same thing over and over again. Guys, you can go back and have a look at my my profile and you see it. It's been quite a few years now, and even the times that I wasn't posting, I was still doing work. Right? But ultimately, what I'm trying to get at here is anytime interest rates move up, right, it tends to follow with dollar index moving to the upside as well. So dollar tends to chase higher yields. Yeah, so when dollar tends to rally to the upside, we haven't actually seen it as of yet. We have, but we haven't. It's been very choppy to the upside. If the yields continue to increase and we get the run up to 4.341, right, I see dollar index at least rallying up to the midpoint at 99, 99.5 potentially, and even a chance for us to get up to the 100 to 101 mark. I do see that chance of dollar index playing out in that way, but at the same time, I do see the chance of us selling off and taking out the lows. So it is a 50-50 condition at the moment. We have been consolidating. We've been doing so for the past 4 weeks, right? So there's nothing really major going on, but that could insinuate a low resistance liquidity run either to the upside, taking out the most recent highs or the lows, right? Last week, we took out the highs, we failed to take out the lows. The week prior to that, we took out the lows, but failed to take out the highs. The week prior to that, we took out the highs. The week prior to that, we took out the highs, but kept the lows intact. So even though the market has been on a downward trajectory, we've managed to take out the next previous week's high. All right. The question is, are we going to get it this week? We're taking out the previous week's high, right, with this candle here, but are we going to get it with, because remember, this week is an inside week. The question is, if we rally to the upside, we're going to take out 99.074, or we're going to take the lows out and dump. Now, to get the answer to that question, I'd have to look at the daily time frame. And guys, it is choppy, it is rough, you know. I mean, after we've taken out buy side liquidity, took a dump. But at the end of the day, we have two inefficiencies that price is still trading inside of. All right, the market could easily reverse from this area and make its way up to the upside. We have on the weekly time frame, on the 3-month time frame, an imbalance that price has actually respected. So this is a 3-month buy side imbalance, sell side inefficiency, and price has respected it perfectly, especially over the past couple of days, within July at least, you know. So if we do hold its weight up here, then I'll be looking out for the new week opening gap high, the premium and discount, to be used as a form of support going forward. And I'll be having a look at this sell side imbalance, buy side inefficiency as the next draw on liquidity. That is very choppy, guys. It is honestly probably 60-40 right now. I can't put too much emphasis on this movement, so I'd rather sit on my hands and wait to see how we open up on Sunday, and then obviously take it from there. But how that relates to GBPUSD when you have a look at the weekly first is, well, we've been on the uptrend, we've had a minor dip, taking out sell side liquidity, we've dropped back down into the bullish inversion fair value gap, we've created a form of volatility in the sense of we've had the wick shoot down into this area. We respected the previous lower on the 12th of May, and it's looking like it's off to the races. Where else could we go? Well, we're looking at the next high, right? If dollar index was to rally to the upside, if that was to be the case, I could expect GBPUSD to actually continue to fall. But then on the weekly time frame, it's not really showing me anything major. Only when I look at the daily, you can see that we've seen the lows taken out, new market structure lows being printed, right? We have 31415, 314100, right? So we never actually got the lows, but this is something of importance. It's too clean, guys. It's too clean, and I'm expecting this price at definitely 1.31400 to be booked in the near future. But what we've seen here is low resistance this week into an area of imbalance, which is the last imbalance within this high to low. So if we were to get a reversal and we turn in this area, then I'll be looking at this long-term low at 1.31415 to 1.31400, give or take, pretty much. I look at these lows as relative equal lows. All right. If it breaks above and it looks to take out the highs, the 1.35889, I do not want to see a candle body closure in that area. Right. A reversal for GBPUSD, and you could even say EURUSD, which actually looks more probable for that to play out, for the fact that we've seen a doji and indecision candle above the premium consequent encroachment of the sell side imbalance, buy side inefficiency. And on the Friday, we've managed to close lower within the lower portion of the consequent encroachment. We also have a low to look out for, which is at 1.15278, which could be the next draw to the downside, which would aid dollar index rallying higher. Right, so it goes hand in hand. So it's like I'm more inclined to say I'm bearish, I'm short-term bearish when it comes down to EURUSD, just for the fact that on the weekly it's very choppy, man. Inside week as well, so I can expect explosion this week, right? But where we want to go, well, we have 1.13719, that's a potential draw. But ultimately, guys, yeah, I want to see it reverse from this area here. If it doesn't, then I'll be sitting on my hands. I'll be waiting to see if anything else changes, because dollar index is not giving me the confidence right now. I'll be honest with you, man. It's not inspiring me with any confidence at all, at all, at all, at all. So I'm gonna leave you guys with dollar index. No, actually, I'm not. What I'm gonna leave you guys with is I want to leave you guys with Euro USD this time. I'm going to leave you guys with Euro USD on a daily time frame. I'm going to study how Euro USD plays out, because out of Euro USD and GBP USD, I'm more interested in Euro USD playing out, just for the fact that we've seen more signatures in price on the daily and on the lower time frames to give me the indication that if the market was to drop to the downside and make new lows, Euro USD will be, and it's crazy to say because GBP USD is the most aggressive pair out of both of them. Call it like its little brother, the immature little brother compared to the mature older brother that Euro USD is. But I'm actually looking out for the sell-off of Euro USD and GBP USD to follow if we have some blow off top. I want to see some form of a blow off top, some sort of shooting star, something like that, man. Something like that I'll be looking out for. But Euro USD looks like it's already done that. I'm not saying it's going to play out 100%, but it's most likely in comparison to GBP USD. So I think I've covered pretty much everything here. I've covered dollar index and how hostile this condition is right now. Price right now is where price currently sits at. And honestly, if you are a new trader, it would probably be best to sit on your hands, because this is just not the market for the faint-hearted at all, at all, at all. No way. I'm gonna leave you guys with Euro USD, and I will catch up with. Oh man, I keep saying I'm gonna leave you with Euro USD, but I have to go back to where I started the video. So it's back to DXY, I guess. Back to DXY, guys. All right, I'm gonna leave you with the daily time frame, and I'll catch up with you guys when I start recording stock index. So I'm gonna move over to Nasdaq, Dow Jones, and S&P 500. I mean, in the order that I'm going to do it in is going to be ES, NQ, and YM. I'm going to chop that up, and I'll get back to you very shortly.